Hey folks, thanks for joining me this morning. Sorry to throw you a curveball to do a live event, but there's so much stuff going on that I wanted to cover with you guys today. So here's what we're going to talk about. If you're new to my channel, I'm going to start out with the MBS charts. You're going to see how they are plummeting right now. The bad news there is if you're new to the channel, when the chart goes down, mortgage rates go up. So we're going to talk about that briefly, where that's setting rates, what's causing rates to move right now. So what we're going to talk about in today's video is Iran and the oil prices, and I'm going to show you how we've been talking about oil for years. And everybody keeps saying, Dan, why do you talk about oil? It's inflationary. Well, now you're really learning that firsthand. Private credit. Have you heard all over the news, like I got over here, BlackRock was on earlier, and I think there's a company called Q is on Fox channel, one of our news channels over here. There was a Q. Private credit, what is it? And people are getting hammered by, they're saying, okay, could be the next subprime crisis. So we're going to talk about that as well. We're going to talk about inflation, all the stuff that the Federal Reserve looks at, because the Fed's meeting this week. They're meeting on Wednesday. They're going to come out and tell us what they're going to do. There's a 99.3% chance they're going to do something, and you probably know it at this point. So, and then we're going to talk midterm elections, how this is going to have a huge to-do with all this stuff. So without further ado, folks, please ask me any questions as we go along. Let me know if you can hear me okay, because sometimes the audio here is not too good. So, but without further ado, let's get to these things. So if you're new to the channel, this is bad. Okay, so here's how mortgage rates work. It follows a bond. In mortgages, it follows this over here. It's called the MBS. All you have to understand, that number up there, see it says 34? Well, that's today. Okay, so we're having a comeback. So let's take a kind of a dive into this over here. So what you have to understand is how mortgage rates work is by this bond right here. It's a mortgage bond. All you have to know is if the price of the bond goes down, if this is red, that's not good news. Rates go up. This went from here to here. Rates went from 5.99 to, what the hell are they at now? Almost 6.5. That's a massive move. Why? It's oil. It's oil. So they're going to say it's inflationary and things like that. I'm in agreement with all this stuff. And I want your context on this. It is going to get a little political today. All I want to do, my channel, I want to do this a little bit different for you guys. I don't want to tell you guys what to do, what's going to happen. I want to give you the tools for you guys to make your own decisions. I'll give you my take. Hopefully that's why you're here. And then you take my information and do all your due diligence. Make sure you use AI. AI is phenomenal. And then once you decide on what's what, if you're looking, like in this case, to buy a house or refinance, I'd love to help you. But maybe it's deciding, okay, are you going to buy those stocks? How much money should you put away? What should you do? So let's get over to kind of what's going on today and the whys behind it. But let's start out with this. What is private credit? Okay, this has a big to-do because you're going to see this makes the market volatile. And a lot of people are sitting here, and there was a take on, it was a caption this weekend on CNBC. And the commentator asked two people. They're like, okay, what's this private credit stuff? And they're like, well, it's like subprime, like this. Well, you can buy this over here, and if they devalue that thing to book value, here's what's going to. And they're like, okay, can somebody make it make sense? Let me make it make sense in the easiest terms. Remember back in 2000, let's say 2005, 2006, 2007, there's those things called subprime mortgages. They were mortgages or loans. Think of it that way. Loans to people that didn't really have that great a credit, probably shouldn't have otherwise qualified. And when all the shit hit the fan on that stuff, it did collapse. What you had is people just kept doing those bad programs while the values of their homes were going up. And then when things started to really get to true value, it started to crumble. Let me explain. So here's the private credit. Let's say I'm a bank, and let's say you're an AI company, and you come up with this great idea. Okay, you come to me, and you're like, Dan, I need $1 billion, because I think NVIDIA today is just buying another company for something over there. And so you come to me, and you're like, I need $1 billion to buy all this data centers and all these other things. So I'm like, okay, well, based on the valuation of Meta, all these other companies, I can give you the $1 billion. So now they're coming back saying, what's the value of these companies really? Kind of like, what's the values of those homes really back in 2006, just when everybody needed to buy a house? Appraisals were inflated. People were just FOMOing all over the place. So that's where you're seeing banks going in and lending all these AI companies and data centers and all these companies money. Well, how solid is that money? So here's what they're saying. Okay, they're saying, well, I lent company A money, and we value their stock, say, or they're valued $100, okay, because they're kind of the same as NVIDIA. Maybe. Well, let's say over time, NVIDIA just, they skyrocket to Amazon.com. You know, they're that company. And then those others, Package.com and PackageDeliveries.com and all those companies, they just failed. Okay, so now when you try to reevaluate I lent you money for your AI company, but now you're not doing as good as NVIDIA, who I valued your company off of. And so I'm thinking, this isn't maybe a good deal. So what's really the value of your company? Well, that's the unknown. What truly is the value of these companies? People don't know. So now investors are saying, you know, I don't want to get stuck in this thing because if the valuations come in lower, then my value's low and it's going to plummet. That's basically what it is. So it's banks and investments companies like Goldman Sachs lending to these AI companies is, you know, junk homeowners or home buyers. Some of them are going to default. Right now, there's only 1% defaulted. And I was watching an analysis this morning, and I actually did some research over the weekend. 1% is in default. So it's huge for mainstream media. You know, not all these companies are going to survive, so that's the conundrum behind this. So really, the private credit crisis, it really not going to affect us like the housing market in 2006, 2008. So that's just a little understanding of the private credit markets. Now let's get over to some of the numbers. Now some of these numbers don't look too good. When you look at manufacturing and you look at the jobs report, we're going to have the Fed coming out this week. I'm just going to kind of go through this with just a broad brush because the headlines right now is oil. Everything is going to move off of oil. So okay, in a second I'll go to the stock market. We have hopefully some settlements in Iran. I know some oil's getting out of Iran, so that's good news. And I'll end at this, and you guys can comment down below. Do you really think we're going to lose this thing? Okay, so I'll leave it at that. I know you have your own political comments, but I'm thinking, you know, in a week or two, it's going to be settled. Yeah, we don't know what the regime change is going to be. I don't know. You don't know. The politicians don't know. People are going to come out and analyze it. You know, half of them are going to be right, half are going to be wrong. But let's just go through this week's data. This is the last information the Fed's going to get. So what we know so far from the Fed, I want to get to interest rates now, is we have had high inflation. Inflation's over 3%. The Fed's sitting here saying, okay, we need 2%. We really do. Okay, so here's what a lot of people don't understand. Inflation, you're saying, okay, well, gas prices, let's go to beef. Beef prices were, you know, $1 a pound, then they ran up to $5 a pound. Crazy. Okay, so now they're $6 a pound. And you're saying, okay, I thought Trump was going to make everything more cheaper. Well, what you have to understand about inflation, it's the acceleration of the price up. Okay, so think of it every year. If we had that 9% inflation rate at one point, well, then the next year we had 2%. It doesn't mean we gave it all back and then went 2% higher from there. No, it says we went 9, now we're up 2 more from there, so we're at 11 plus the compounded piece of that. So it's bad. So you have to stay at a low compounding rate. So think every year we're going to have X amount of inflation. You want it as low as you can. The Fed's pegged 2%. Well, we're at 3.1, 3.2. So what's that going to tell us? Well, the Fed watches a bunch of things. And let's get to that because that's all that's really going to matter this week. We can get jobs numbers coming in. We can get anything else. But once the war is over, you know, I'll give you my predictions at the end of this. Another tool I want you guys to use is right through here. Go to the bls.gov. Okay, I don't care if you're a consumer, if you're watching this video, you're interested in this stuff. Check it out. It gives you all the news releases, like the other day, CPI, what it came in at, real average hourly earnings, San Antonio. It gives you everything you need. This is the facts, folks. Don't watch me. Don't watch this other CNBC. If you really want the truth, get these things. So check out those right through there, the jobs openings, numbers and everything. It's basically a low hire, low fire. So let's now get over to what the Federal Reserve watches. I know I do this every day. So they watch inflation, the PCE. It's at 2.8. It's not 2. And it's probably higher than that once you get oil adjusted in here over the next reading. The next reading is going to be bad. Okay, because you're going to have oil with, you know, averaging right now $9,500 a barrel. We were at 60. So you know the inflation number is going to come in. So the next reading when it comes in higher and the analyst said, well, you know, this is unexpected. You guys know This is where I watch TV sometimes. I'm sitting here saying, how did you not know this? I knew this. Okay, so let me get to the unemployment rate. Nobody knows what it is. So if you have a job, you're probably get another job. Where people are getting hammered, and I was just talking to a bunch of my sales guys, is they have kids, and I have kids, but they're a little bit older. People in the 23 to 27% range, man, you guys are getting hammered right now. It's hard to get that first job. I had a tough time getting my first job, so it's hard getting that first job, and especially in this environment. If you have any mathematics degree of any sort or marketing, it's tough with AI. I use AI for all the tools. I had a buddy this weekend saying, okay, Dan, you used to have the common man thumbnails. It was you just sitting there with this, and now you're in a suit and tie and all this stuff. I'm like, it's AI. You just got to keep up with the times. So the unfortunate part about you youngsters out there is it's tough. I get it. So, go into that first job. I was a collector downtown Chicago, minimum wage, chasing people who didn't pay on their radio. If they bought a radio, boombox or whatever, or a TV. Yeah, I was going home to home collecting payments for people that weren't paying. Yeah, that's how I started my job. I come out of college with an economics degree thinking, I'm moving from West Virginia to Chicago. I'm going to be a Wall Street titan. Well, a Chicago street titan. And I end up being a collector downtown Chicago. So here I am today. But you have the unemployment rate. It's in some areas it's bad, some areas it's good. The trades right now, that's what my family was in. People are doing well. Friends of mine back home, welders, things like that. They're doing fantastic. So that's that piece of the puzzle. Let's get over to here. What's the Fed going to do? I'm going to tell you it's 100% chance. Well, you know what? Let's go down through here. It is a 99.1% chance the Federal Reserve is not going to do anything. So here's the kind of curveball with this thing. It's too early in the phase of this war. So let me give you my take on some of these. Let's get over the stock market, just see how it's up 500 points. So I kept telling you guys, don't sell high and then don't sell low and then buy high, because a lot of people are freaking out. The markets love panicking you. I can see it all day long. And again, a lot of times I sit there and scratch my head saying, didn't you really know? But the markets are doing pretty good today. But the reason why is right through here. Stock futures rise as oil's back below $100 a barrel. So right now, everything else is out the table. It's all going to be about oil. Okay, so we got oil down. So let's kicks cryptocurrency. Now, so this is what's telling me. Here's what's in my mind. Here's what I do each morning when I come in before I show you guys. And this is kind of a good precursor to all this. I come in, I watch the news all weekend, and it was weird because you didn't get a lot of mainstream stuff on what was going over in the Middle East. So I was like, okay, is this good or bad? So this morning I come in, oil prices below $100 a barrel, and then you start seeing Bitcoin up. I'm like, okay, this is great news for the market because people buy Bitcoin when they're risky. When they say they want more risk on, they're going to buy Bitcoin. But if you go to the market opens, let's just go over, see, it's up almost 600 points. Everything across the board is good. Why? Oil's down. Okay, so that's the biggest news for this week. The Fed's not going to do anything. Would you do anything? You had inflation, at a rate higher than you expected. You had oil prices. That was my curveball. I'm like, okay, if this lasts longer, it's not good, and especially not good for middle and lower income. Why? We all got to drive to work, drive your kids to school, drive to this, go over to here. Do you realize oil's in like everything? Your chemicals, your makeup, your tires, your everything. It's basically in all your products. So as oil goes, that's where the economy goes. That's where inflation goes. Okay, so let's get more tools I want to give you guys. Everything, folks, now is free. Okay, these are free. I'm just going to caption this real quick. Go to just Google. It's down below. It's Stan Studio. Just Dan Frio, Stan Studio. You can get all these calculators for free. I want you guys to use these tools. So again, my goal here is to help you guys understand these things, but not only these things, the overall markets. Okay, so just want to recap what we went over today. Iran in the oil trades. What's my expectations? Well, let's get to my last thing right through here. What would I be doing right now? I keep telling you guys lock in. I've been telling you to lock in since 5.99. And a lot of people are like, Dan, these rates keep going down. What are you talking about? Why would if it keeps going? Well, I told you so. I said they'll go up much quicker than they're going to go down. It's like gas prices. You just watch gas prices on your way back and forth to work. You're probably going to see it. It's going to be $4 a gallon, and it'll skyrocket there quick. and then every day it'll go down a penny or 3 or 4 cents. Remember when it went up like 75 cents or 50 cents over the day? Let me know if yours did that down below. But I'm saying lock in. Don't freak yourselves out. Okay, but if you have a longer duration of time, just float. Okay, so if you're looking, we can maybe get you pre-approved. We had, I think, 3 contracts come in over the weekend, and several people are back in the market for getting pre-approved. But I have to give you some advice, though. If you got pre-approved 2-3 weeks ago, make sure you reach out to the lender or myself to make sure those rates, because, again, this happened last week. This is bad. Okay, again, when that chart goes down, that means mortgage rates are going up. The good news for the day is right over through there. See where it says up 31? We're getting a nice recovery, but this is what happened last week. So again, if you got a quote previously, make sure you get updated numbers for that. So let's get down through. I'm just going to go one by one with these, and let me know if you guys have any questions out there. Let's see what we got. People FOMO too much. I get it. I drive 2 hours to work every day because everything's getting so expensive. Further move away. I get it. I don't live in Chicago. I live in one of the Chicago suburbs. I say I live in Chicago because you guys probably know the town I live in. Why? Well, when I moved out here, people are like, "Man, you're living. Why is it even populated out there?" Now it's very populated out here. I bought out here like 25 years ago, but so that's what you got to do. You got to go where it is. But thanks for joining me today. But let's go through the MBSs. They are up 31. That means mortgage rates are going to come down into, it's still going to be above my range. My range, I've been expecting for the Q1 of this year is between 5.875 and 6.25. We were at 5.99, I think, like 2 Fridays ago. And then all of a sudden the conflict in the Middle East occurred. Over through here, just watch oil. Just watch oil and you'll see everything go. As oil comes down, as soon as you see, people joining us, hopefully in the Strait of Hormuz, getting that oil flowing, you're going to see the stock market rally like you're seeing today, but even more. The Dow, I don't know if you remember, the Dow 2-3 weeks ago was at 50,000. Well, now we're at 46 something. We'll get there in a second. But private credit, now you know a little bit more about private credit. I don't think it's a great FOMO point like we got on Sniper, but it's mainstream media. They have to keep you constantly on edge, and that the Iranian war conflict is enough. But you throw in this private credit. And then you go to the economic calendar for the week and so forth. So let me give you one last piece of the puzzle. And this is where I don't want to get political, but you got to get political. Okay, all I want to say it this way. It is a midterm year, okay? And why I mean that is every politician's going to tell you whatever you want to get your vote. So all I'm asking you to do, just do your research. I don't want to, I hate when people say, I voted. But did you really vote wisely? Did you know who you voted for? Because the frustrating part comes is when you have these politicians go in there, and I don't think they should be in there at 90 years old. But go ahead and yell at me, but my mom's 88, and I wouldn't want her in politics. Let's put it that way. But it's a midterm election, so they're going to tell you anything and everything they want. I see these ads here. I live in Illinois, and I'm like, we have a balanced budget? Huh? So I looked it up, and yes, technically we do, because they pushed a $2.6 billion deficit to next year. So this year we have a balanced budget. But here's what I'm telling you. Trump's not going to want this oil thing to have it be an issue in the midterms. Here's what could happen. This could get rectified quickly. Oil could plummet back down to $60 a barrel where it was previously. Gas prices will tumble. You'll see inflation start to tumble. Then people will feel good about themselves, good about the inflation, good about their paychecks, and they vote because where their money is. Where are you getting the most reward from? Where are who's rewarding you the most? That's where your votes go. So the only thing I ask you is please pay attention to who you're voting for and the whys behind it. And but I don't think this oil thing, I think it's going to be revived, or it's going to be rectified pretty darn quick. So if we go back to this, my expectations are going to be in the same realm that they were previous to this. We're going to be teetering in the 5.875 to 6.25. So put in your applications right now. If you're a homeowner and you're trying to track these things, go to my website right through here. It's RateWatch or the rate update. If you're a homeowner, put in your mortgage information in the RateWatch 2.1. I'll track your mortgage rate for you. Basically, you put in the rate you want to be contacted or the monthly savings. That's what we did in RateWatch 2.1. We added in how much of a monthly savings would you want. But if you're a homeowner or trying to buy out there and you're thinking, okay, can I get approved or whatever, reach out to us. We'd love to help, folks. I'm licensed in all 50 states as well as Puerto Rico. My name's Dan Frio. My slogan here is this: one application, one credit pool. I'm going to compare your loan to over 30 different lenders. How? Why? Here's how it works. Okay, I work at a bank that provides me licensing in all 50 states as well as Puerto Rico. But we're also set up with almost 40 other lenders. Why? To help you guys out. You're watching this because you're a loan officer, maybe realtor, or you're a homeowner, home buyer trying to track rates and thinking, okay, I'd love to track rates. Like me, I track car prices if I want to buy a car. If you're tracking rates, reach out to me. There's no obligation. I don't sell the data. It's right up through there. I've been doing this for over 35 years. I'd love to help you. But today I'm expecting rates. Let's conclude this. MBSs are up about 30 points. So we're going to see rates come down just a little bit. We could see about 6.35-ish. We won't be getting my range just yet, but follow the oil because that's going to tell you where all this goes. And then also, last but not least, the Fed. There is a 99% chance the Fed's not going to cut at this next meeting in 2 days. But if you want to find out more and watch this, see how each tick by tick goes or day by day, join me today right over through there. Subscribe to my channel. Other than that is it for today, folks. If you got any questions before I go, I'd love to answer. Other than that, that's what's going on today. And if there's no real events today, I won't be doing a closing bell. If there is, I'll be doing a special post this evening. It will be a video letting you know what happened with these and the whys behind it for the day, folks. Thanks for watching. I will be posting this again on my YouTube channel as a video, so if you watched it already, you don't have to watch it again. I just do this because a lot of people don't find me on my live events. So thanks for watching. If you need some help with a mortgage or if you need some mortgage calculators or anything like that, just scroll down below at the bottom. You're going to find all these things and more. But make sure you're an educated consumer, realtor, or loan officer. And if you want to find more information about all this stuff, reach out to me. I would love to help you out.